Hey, everybody, we're excited to be here. We're going to be focusing on B2B growth today. I'm going to introduce the format a little bit. I'm going to introduce Guillaume a little bit, and then we're going to dive right into it. So we're going to do three things. First, small introduction. I think we're going to zoom out a little bit. We're going to look at macro trends of B2B growth, company-centric and maybe career-centric. Let's see. Then I think we're going to zoom in a little bit more, with micro trends, if that's a thing, more like company-centric and career-centric, if it's possible. Micro trends, I mean, basically some strategies. We might go deep into specific subjects. I don't know, growth loops, big bets versus small bets, LTV, product-led growth, all of the above. First, I want to introduce Guillaume a little bit. Basically, 15 years of growth expertise in B2B, SaaS, not just SaaS, in B2B. Growth advisor at Segment, Drift, Monkey Learn, I think Mad Kudu, and a bunch of other companies. You were head of growth at Mention, I believe. And then before that, you actually worked at Apple. And your expertise is around growth, B2B acquisition and conversion, B2B SaaS, performance marketing, high volume acquisition, long conversion cycles. And currently you're co-founder of HyperGrowth Partners, which is essentially growth advice. And I like the term pattern matching for growing startups. And already a nice track record. I saw that Twilio acquired Segment recently for 3.2 billion, and you were part of the growth of Segment. And I think it was Okta. Is that it? Okta Inc. that acquired
Auth0.
Auth0. Sorry.
For the startup where my partner Gonto was there from the first 5 employees to the exits.
That's exciting, and that was like a 7 billion exit, something like this, right?
Yeah.
Like this. So nice track record. And as I was saying when we were talking, I was thinking about you in the car last week, and I know that's weird, but I was thinking like Guillaume's responsible for personally my biggest win and my biggest fail from 2018. It was. And one of them had to do with lifetime value predictions, which was a big use of resources and didn't work really well. That was the fail. And the win was really around that conversational marketing piece and enriching IPs and then automating that life cycle. One of the things that you offer and the value you offer with hypergrowth specifically, which I feel is kind of similar to our context at Growth Tribe, is we work with a lot of different clients. And, I guess it's that idea of pattern matching, seeing patterns across industries, organizations, and identifying recurring trends, models, frameworks, whatever we want to call them, around go-to strategies that seem to work. So if you're okay with it, I'd actually like to kick off with that. We go quite meta and quite macro.
Yeah, let's go.
Can we go through what you're excited about at the moment? And it doesn't have to be at the moment. It can also be for the past 4 years if it hasn't changed. So maybe let's start a bit macro.
Yeah, I'm excited. I'm not sure excited is the right word. I'm seeing a trend right now. So like for the past 2+ years, I've started to do 2 things very actively: advisory, and we're going to go over that, and investment in early stage startups. And both are connected. And, if you want to, people often ask me, like, how do I decide whether I advise or I invest? It's very easy, right? I invest while my dollars are worthwhile, so early stage, right? And then when it gets too big for my dollars to be, let's say, irrelevant, then my time becomes relevant. Okay, so it's kind of a spectrum of engagement. And what we're seeing is the multiples, the valuations going up, especially for the past 6 to 9 months, right? I'm seeing like multiples, especially in the US, that are very, very high. So I'm not going to talk about investing strategies today, but there's a consequence for marketers. The consequence is that the expectation of growth for those companies is heightened year after year. We used to say that if you did 2 or 3x year over year, that was like Rockstar. And now that's kind of the baseline expectation, all right, for company growth. Now that means marketers need to actually source 2, 3, 4, 5 times the pipeline in a given year than the prior year. That is more than challenging because you can't just increase that like you would like increase the size of the sales team. Some channels, some strategies have a limit. Now, that's why I said excited isn't really the right word. It's a fantastic opportunity for people like me that, as you said, have the ability to test a lot of different strategies in a lot of different companies and find what's working right now outside of the obvious. Because the obvious is not going to bring you 5x growth, right? Unless you have, let's say, a top-notch 1% product, in which case marketing isn't what's making you win, okay? Obviously, if you have like a webinar or like platform in 2020, it's not marketing that's pushing the growth, right? It's something else, and we all know what that is. So I'm seeing the first trend that I see is this expectation of heightened growth and the consequences that come with it. The second one that I'm seeing is the increase in the cost of acquisition. And without getting just too specific on CAC metrics, with more valuation comes more dollars, right? More let's say, investment dollars going to companies. And most companies just don't know how to spend it well. And so they're just like dumping all that money on advertising platforms and the other similar growth strategies. And so CAC is going up because there's limited inventory. Okay. And so CAC is going up. And there's one interesting problem with all of that is that the prices we sell our software or our product or services at is just going with inflation. Not that much. You're not 3xing the price of your product from one year to the other. You're definitely not, right? Or you have a great product and let me know so I can invest, right? But so if the CAC goes up and your LTV is fairly stable, you're going into a CAC to LTV crunch, right? Basically, your margins are going down, and you can see the wall, and you're running towards the wall. Okay, so that is a very significant trend I'm seeing for high growth companies, which are exhausting their cheap, efficient CAC channels for the growth rate that they want. That's why it's all connected. At the growth rate they expect, they cannot keep up with the CAC increase, and thus need to find other ways to grow. So yeah, that's kind of like the very macro trend at the industry level. And again, that is specific to B2B. I have much less context on B2C.
Absolutely. Tough one. Do you see a difference? So you're saying there's a difference in benchmarking across what's acceptable as a growth rate. I don't know. Do you have any experience on whether there's a difference in the USA versus Europe around this?
Absolutely. And that's also related to valuations and exits. All right. In exits, if in Europe we have much fewer exits. There's a few big exits, but there's very little, like it's a mid-size exits. There's just less companies that can acquire. There's less M&A. Valuations are lower. I just saw we had a couple of exits recently in France, which is a market I know well, in the $30 million range for companies that were doing 10, 12 millions in revenue. Yeah. That's a 3x multiple. Yeah. That's sad. That's really sad. Okay. So yes, the expectations in the US are higher because now, it's very simple. There's too much money on the investment side of the balance. There's just way too much money. Yep. So valuations are going up. I decided not to invest, to speak in proper terms, on a deal that was valued at $60 million total company valuation, and they were doing $400K annual revenue. So
we're talking multiple,
above 100, multiples above 100, right?
Yeah, no, that's really interesting. So let me rebound on this one. You were talking about this CAC CLTV crunch. So what we see sometimes, because we work in the world of B2C and B2B, but we start to see it in B2B as well, that there's, especially in the world of growth, we fall prey to short-termism. Let me explain it for 2 seconds. I feel that the world of growth and marketing and sometimes product has an ADHD problem. Even in B2B, we get bored easily and we have shiny new object syndrome. Difficult initiatives that are harder to implement, that require more deep work. And that's where you're really a hero, I think, is also on systemizing things, building these engines, building these systems. Because in the areas of customer acquisition, there's big, long marathons, as we like to call them, like SEO, building a content powerhouse, community building, that give sort of long-term return on investment. Or deeper in the funnel, the wonderful world of product-led growth, actually doing your user research, building systems rather than just campaigns or stuff. That old adage that we've been throwing around a lot, experiment fast and double down on what works. Typically, we completely forget to double down on what actually works. And many teams and people in growth tend to forget on the double down part. Because that requires traits of self-control, business process management, system creation that we just don't get into growth for. We get into growth because it's exciting, it's new, there's lots of new tools, bells and whistles. Do you see that as well? And do you agree with this? Or how does one solve this CAC CLTV issue? Is it simply, yeah.
So to solve the CAC to LTV issue and the high growth rate expectation, you need a couple of things. One, as you said, you need to go over the ADHD problem. You need to have like some long-term thinking. You need to think today, this is what I'm capable of bringing. What will scale 5x 1 year from now? What is the depth of each of those strategies? I often think in like performance versus depth. For example, I'm just going to take a random example. Let's say that you found a great way to acquire users through Reddit ads. Good for you. You find a good Reddit community that's just really relevant for your product, maybe analytics or whatever, right? Great CAC because there's little competition, so very high performance. The truth is, there's also very little depth, right? The inventory of that audience on Reddit is just super shallow, okay? So it's not going to scale 5x. So you have two ways. Are you going to just like stack hundreds of those things, one behind the other, right? Or are you going to find something that has a lot of depth? Okay, so when I think of like long-term planning, I think like that. Okay. The second strategy is you need to find campaigns or strategies, say that are that have a CAC efficiency as it scales. Okay, generally CAC increases as you scale, right? As you get to the easy audiences and you pluck the, let's say, the ripe fruits from the tree, all right, and then those audiences have converted, you just increase the size of the audience and you increase, whether that's paid or that's SEO, whatever, right? You just go broader and broader and broader, right? And the same is also true for outbound emails, right? You go from very focused to less focused. So the performance goes down, which means your CAC goes up, okay? So the problem is that most growth marketing strategies have a negative, let's say, CAC scaling effect. What you need to do is to find and build strategies that have a positive CAC scaling effect. The more people come in, the cheaper it becomes. And that's where, if you want to take a step back and you want to talk about marketing versus growth marketing, here's I'd say, my approach to it. Marketing has a low, let's say, upfront cost, right? You're just building a campaign, and has a high running cost, right? Running the campaign has cost, whether that's like displaying ads or doing events or whatnot, okay? Growth marketing is the opposite. You're building with engineering and humans and whatnot, a quasi product, okay, that will deliver value to push the people, incentivize the people, the audience to come to you. But that investment is upfront. The more people go through this product, right, the cheaper the cost per customer becomes. Okay, so you have now a positive scaling incentive. Does that make sense?
Yeah. It sounds a lot, Guillaume, like compound interest rates, actually, when you describe it like this. Compounding, which is, I think, considered by physicists as one of the most powerful forces in the universe. And our brains have sort of...
And finance folks.
And finance folks. Financial, right? Compound interest.
Yeah.
So I think it's interesting maybe to talk about it. This sort of long-termism and this compounding, basically put, compounding returns are returns that grow increasingly rapidly every time you add a unit. And I think the formula was like future value equals present value times 1 plus I to the power of n. And I is the interest rate, and n is the number of years, let's say. So it's exponential as opposed to linear. So, and we talked about depth a little bit.
And just also like exponential growth is something that I hope you all have learned in 2020 with what's happened to all of us.
So you mean viral effects? You want to go into that a little bit?
Yes. Okay. That's just like if you want to see viral, like exponential growth, like COVID-19 is viral. It is like exponential, right? It's just that instead of like being yearly growth, it's daily growth.
Exactly. Yeah. And by the way, it's the 1-year anniversary of the World Health Organization declaring COVID today. So we're only allowed to mention COVID once, and
it's done. We're over.
Yeah,
done.
We'll move over.
Moving on.
Okay, so that's interesting. So the idea is a little bit: don't forget to systemize, operationalize, and look for depth.
Look for decreasing CAC and upfronting your costs, and And the other thing I want to share is as marketers become stressed and have budget and they just pull budget, they start doing more and more stupid things, which is just putting more and more pressure and increasing, let's say, the advertising, outbound email, whatever pressure on the audience, but not delivering value. And that, I think, is one of the key mistakes. That's where like people like me can try and help, which is by creating strategies and growth campaigns that deliver real value to the audience, true value, something that is helpful, and not talking about you and your product, but trying to help your future customer, right? Trying to really help them. That's what works.
That's amazing. And you know, we do a lot of growth courses. We have like 12-week formats, for example, on building growth marketeers. The first things we focus on, completely aligned with what you're saying, the jobs to be done framework, understanding the customer, user research, what are humans, you know, hiring my product to do, some of those fundamentals. And sometimes we jump maybe too fast into the bells and whistles and we forget some of these fundamentals. Let me switch gears, but stay on the similar topic still. Where should a growth person or team be focusing their attention then in order to reduce that CAC and or increase that CLTV? It's such a crucial question to ask yourself. So let me introduce it a little bit. I guess it often depends on where the growth team sits, whether it's under product or under marketing, what life cycle stage the product is at. But typically there's like 3 or 4 growth levers to pull, right? Drivers to pull, like acquisition, net new users, customers, retention, keeping and engaging users, customers, and then maybe revenue monetization, like selling, upselling, cross-selling. We saw this nice little study, I think it was about a month ago, where we looked at what growth teams are discussing online. It's the aggregate of blog articles, webinars, forums, over like 2,000 pieces. 70% was discussing user acquisition, 20% was on retention and stickiness, and 10% was on monetization. Yet looking at impact on the bottom line of the business, maybe the attention should be flipped a little bit. Focusing on retention is 2 to 4x as efficient as focusing on acquisition. Focusing on monetization is maybe twice as efficient as focusing on retention, for example. Is that true? Is that false? Do you need to acquire more customers in any case? Should we flip the balance a bit?
Okay. Great context. 2 things. It really depends on like your product dynamics, how fast you sell, and let's say the ACV and like what you're selling motion. Like, do you have a self-serve PLG motion, or do you have a sales-assisted, I'd say sales-driven motion? Right? Are you selling to SMBs or are you selling to enterprise? And again, that goes back to the pattern matching. Okay. I can say, like, we do some of the same things. Like I help large organizations or large startups, let's say, audit and think through what they're doing right, what they're doing wrong, and help them assess, let's say, their strengths, and then build a strong growth organization that's going to focus on where are the biggest wins. The way I approach that, which is kind of the question you're asking, is I have the teams build a life cycle map, visual lifecycle map of all the steps of the customer experience from the very top, from the ads, emails, or however you're acquiring, say, prospects, to the very bottom, with the drop-offs at each stage. All right, and it's important that you use the word drop-off and not the word conversion rate, because conversion rate feels positive, right? But when the conversion rate is 4%, it means you dropped off 96%. Of the people. Just think about it. If you're the leader in an army squadron and you come back with 4% of the squad, like, is that success? I would wager it's not. Okay, you lost 96% of the troops. Okay, so that's important. And then I use pattern matching on like what I know the good conversion rates are at each stage, what they should be for that specific like quadrant of like ACV, target focus of industry. Say, this looks like a very big problem. This looks like something that is under optimized, and this is okay. Generally speaking, I like to look at it this way. Is the funnel 80% optimized, and we have a pipe more than we have, let's say, a pasta strainer? Okay. Thus, can we focus on acquisition? What's the biggest problem? Is it like the funnel itself, or is it like the cost of acquisition that is either too high or we're just bringing the wrong kind of leads. So I look at those big things. Like if we have the right kind of leads at the right price, but they're not converting, then I have a funnel issue. Okay. Now going to your question in retention and monetization. Generally, I try to stay away from retention. Okay. Yes, it's a big, meaty problem. However, in B2B SaaS, it's a problem that you can see the effects only after 6, 9, 12 months. It's very hard to iterate an experiment on retention and see the measurements within a short time frame. It's extremely hard. Whatever you do today won't be visible before a year. I don't have a year. That's one thing. Second thing, if you're thinking of like 5x year-over-year growth, that's top of funnel growth. Okay? Which means whomever you're retaining, even if you retain 100%, that's just 1/5 of today's growth. So the more you grow on the top of funnel, the less past customers are retention is important for a time. For a time. Okay? So that's kind of how to think about it. However, I'd say if you have a product that has some kind of virality or it has some kind of network effects, then having a really good, I'd say, activation KPI and really high activation and I'd say usage retention becomes critical because then that fuels your activation, your acquisition for free. Okay?
Yeah. So can I push back on the retention piece a little bit?
Yeah, go ahead. That's what we're here for.
What if you can define early indicators of retention where you don't need to wait 9 months? You can find simple correlation. And anybody here listening, you can use simple tools like Adjust or Amplitude that feed into segment that give you a correlation between specific events. And in the world of B2B enterprise, we know what it is. There's a correlation between number of meetings and chance to actually close that deal typically. It's
Absolutely.
Really so is it not possible to use these early indicators so that growth teams can focus on retention? We like to call it activation or that critical event, let's say.
I haven't been very successful at that every time I've tried. And I'll give you a couple of examples. One is we built a correlation on people that joined a year ago, and we look at the population that churned versus those that retained, right? And so we built a model, and we have a model that seems pretty legit, right? With a correlation factor that is like above like 0.85 or 0.9, which is high. We feel good about it. And then we try to apply it to the current audience, right? And it doesn't work. One of the reasons is the product changed. The pricing changed. It's a year ago. Like every startup increases the prices. The audience who we are acquiring changed. And so the problem is that whatever we did 1 year ago isn't that relevant to what we have today. That's the first thing. The second thing is that it depends on the products. But I was at a very interesting Sequoia conference for the scouts 2 years ago, where we had a really good data-driven presentation on churn reasons. And very often, you have, let's say, 30 to 40% of the churn, which is unpredictable, which is the user, the champion left, moved to another company.
Yep.
Champion moved. The company went under. Or there's a tech change that just makes your product irrelevant. Okay? Yep. So that's like, that is not something you can analyze or predict. Okay? So yes, churn is important. I tend to think that what is important is net dollar retention, all right? Which is making sure that the people who are using your product pay more and more. Yep. And use it more and more. That is critical. So I think I'd say usage retention, dollar upsells, that is very, very valuable. Yep. Trying to predict who's going to churn is very hard. And I have seen challenges trying to do that.
Yeah, really good point. You mentioned pricing a little bit. We like to focus a lot on pricing. We can't stress it enough. And pricing tends to be done randomly quite a bit. To some extent, pricing is sometimes that untapped growth lever.
Absolutely. Everybody should charge more. Everybody should charge more.
There's that famous Mark Andreessen article called Raise Prices. So two things. Number one is, how do you test pricing? We've done stuff in the past and we recommend you start high, then you start lowering. You test price elasticity by running small tests. You conduct user research, or you just increase it and see what happens. How does one test pricing? How important is it? Because if we're talking about these three levers, right? Acquisition, retention, and monetization, one of the greatest experiments I've ever run was simply around increasing pricing for a previous startup. We need to grow 40% next year. What if we charge more now that we have good stickiness? What's your thoughts on this?
Yeah. It depends a bit, where you're strong and where you're weak. Are you strong on the acquisition versus your competitors? I'm just going to assume that everyone has competitors. It's just rare not to have competitors. If you don't have competitors,
at least substitutes, right?
If there's no competitors or substitutes, and you're growing great, again, drop me an email.
But like this webinar has substitutes. Somebody could be watching Netflix right now, right? Instead of doing this.
So let's just assume we have competitors or substitutes. Then the question is how much elasticity is there in your pricing before people go to competition for a pricing reason, right? I'm not talking of the existing customers. I'm talking of the new customers. Just generally in SaaS, you kind of grandfather the current base in the old pricing.
Can you explain this?
Yes, sorry. So grandfathering means that everybody who is already a customer can stay being a customer at the same price. You get the benefits of the same price until you change, right? Features or product, right? And so when you think, I'm going to increase my price by 30%, generally it only applies to new customers, okay? Some people have applied it to existing customers, but there's a strong backlash with that, which you'd probably want to avoid. The middle ground is to say, hey, you can stay in your current price structure and feature structure, but if you want the new features, you got to change pricing. Yeah, which is fair. That's a good middle ground. Okay. Now, coming to how do you define what the new price should be? Okay. It should be tied to value creation. All right. Okay. And not so much, let's say, what is easy to measure or what's just like the typical like seat based. All right. You see, how am I creating value? Who's getting value, right? There are a lot of, let's say, agencies and consultants who can help you with that, right? I don't know if you guys, David, do it, but there's, in the US, I know a couple of people who do it. And I would recommend working with somebody who is a pricing expert and who's going to do basically user interviews, right? And pricing interviews on the current base and on the future customers and on customers of your competitors to understand like what is the willingness to pay and what is a good metric that they understand is tied to value. At Segment, we changed the metering, so the KPI that was used to charge, right? And we changed the pricing. And the analysis we had from our pricing agency was really good. We had a distribution of all the current customers and basically where they were right now in terms of pricing and where they would go, right? And what is the delta variant from that current position? And we looked at what were the extremes, all right? And all those extremes justified or not, all right? And that's how we actually increased pricing a lot, making sure that the people who had got more value were being charged more.
I'm going to go out on a limb and I'm going to say and predict that this is the most important piece of information we're going to be sharing during this hour. And you were talking about that upfront investment. The investment doesn't have to be big, and you have companies and agencies that do your pricing analysis for $10,000 or $15,000 or euros. It's possible to get it done. If you want to do it yourself, you can also dive into it. There's tools like Price Intelligently that have deep blog, deep resources. You can learn it over the weekend and start experimenting. They share all of the methods on pricing. But it's one of these. Yeah, go ahead.
It is. One of the reasons why I recommend working with an external agency on this specific case is that you asking your customers how much you could charge them more is kind of a tough discussion, right? It's kind of better if you have a third party who does that for you.
Yeah, fair enough. Interesting. Or you get we did this in the past. We had a team that used a PhD, a master student that was working on their thesis.
Yeah.
And that was the basic idea of the thesis. Let's talk about career a little bit, just to change directions. Like, you've been in a growth career for the past 15 years. Of course, now you also invest and advise. But can we talk about people who are entering a career in growth? And let me give it a little bit of context. And specifically in B2B growth. So we see that there's basically, there's different levels. You have novice, beginner. I don't know what this is completely, or I've never applied it yet, but I'm excited about it. And typically there, you might need a solid foundation around the fundamentals of growth, behavioral psychology, life cycle management, a bit of marketing, basics of analytics. So let's talk about there. Where is this career option going? Is it exciting? Is it exploding? Where do you see it going? And second of all, if we could talk people who are a bit more competent or proficient. I've already applied it. It's already part of my daily work. But then I'm thinking of steering my career maybe more to a specialist role. So specifically on marketing, or more on UX, or maybe product owner, or I want to be a manager, getting good at stakeholder management, business casing, leadership. So let's start with beginners, novice first, and then we dive into a little bit more competent, proficient. But where can I go? Where should I go? Do you have any thoughts on this?
Okay. So, So starting with the novice, person, I'd say that growth, or just marketing, just call it like finding customers, right? We could just, the umbrella term, like go-to markets, is probably one of the most valuable things for a startup. Okay, most startups have a good product and fail and disappear by lack of finding customers. Okay. The opposite is also true. Terrible products are able to succeed with good marketing and being able to find customers.
I'm going to put you on the spot. Give us some. Do you have examples of both?
Hey, absolutely. I guess people are excited about the terrible product. A good example of that, HubSpot in the early days. If you remember HubSpot in 2009, 2010, it was barely usable. Even HubSpot themselves did not use it. Okay? Terrible product. Great success. Okay, you want another one? Look at Drift in the early days. Was Drift better than its competition? Definitely not. It was a live chat. Was it a 10x better live chat? No, it was just a live chat. Did they succeed through marketing? Absolutely. Absolutely. Yep. Okay. So there's a ton of examples like that. And so this is a critical role. And at the early stage, my assumption is that there's kind of two paths, right? For the young, let's say, novice there. You either join a team that has a leader that can coach you, or you're joining a startup where you're going to kind of wing it and discover for yourself. Okay. The first one is great, but has a tendency of shaping you as like an eye, right? You're going to be very verticalized and focused on one channel, one angle. Okay, the bigger, you're going to become a specialist. The bigger the company, the more you're going to become a specialist. And you got to make sure that whatever vertical you're going into has potential on the long term. Okay. It's kind of, if you're the paid expert for 5 years, then becoming a generalist is super hard. Okay. On the opposite, if you join a very young company where you got to do everything, no one's going to be able to help you. They're all focused on product, but you're going to be able to like be a really strong generalist and touch all aspects of marketing: the SEO, the website, the emails, the paid, all of it. Okay, if you succeed and the product succeeds, this is a fantastic opportunity at being a rockstar generalist. Okay. So I would tend to prefer that one, okay, with the fact that you don't have any mentorship or support. And so you got to find that within communities. Yep. All right, you got to read books, but you got to join communities, join groups of people that can give you tips and ideas. There's a ton of good Slack communities, a ton of good growth communities everywhere that you can join and share what you're doing, see what others are doing, see what's new, what's hot, and try them at your company. Okay? Yep. So that's that. Now, let's go to the other one, the experienced person.
Yeah, let's say more competent. I apply this already, and I want to take it to the next level. 4 or 5 years experience.
Yeah. So for the more competent for that profile, the real question is like, what is your scope, and eventually, like, do you want to become a CMO? Like, that's one of the questions. Like, is that your way to becoming a CMO? Yeah. All right. I tend to think that what you need to become good at, every time people ask me about management, I say management sucks. Okay, management is about handling humans, and humans are unpredictable. Right? The only reason I'm a manager is because I don't have a choice. Okay, and so I'm good at it because I have to. Now, what it means that you need to be really good at building systems that include people and processes. Okay, and you need to be able to be so good at them that those systems work on their own. That's what we call there's this great strategy that's called engines of work. All right, and so you build an engine that works without you. All right, you just set up and oversee it, but it works without you. You've got to be really good at being able to remove yourself from the process. If you look at what I did at Segment or at Drift or even at Gorgias is a good example. I was the part-time VP of marketing, part-time, but the only one acting VP of marketing for 2 years. And in 2 years, we 10x the revenue. Right, we went from 1.6 to 15 million in revenue, in annual revenue. Okay, and I did that as a part-time job. Right? And I did actually very little. I was not on any execution. I was just setting up the right processes and pushing the people to their best.
So what about someone who has a little bit of that engineer brain to set up the systems and the process and the automation? I mean, we do see that what we've seen, at least for the past 3 years, as the world becomes more digital, so maybe for the past since 1977 or 73, semiconductors, etc. But the best managers and online tend to be the ones that have the best processes. So effective leadership is also about being data-driven, actually, and understanding analytics and understanding the systems.
Yes, I call bullshit on a lot of things. Like, one of my super strengths is having people present to me what the campaign is, what they do, right? And then saying this sounds fishy. Because I've been doing marketing for 15 years. So I know conversion rates, right? And when people tell me like, oh, like I have like a 30% conversion rate on my landing page, I'm like, nah, you're not, right? Something's wrong here, right? And so they say, oh yeah, I checked. I'm like, check again, right? And I'm gonna, and often when people present results and they say it doesn't work, I ask the 5 whys. I ask why 5 times to check, do they understand why it has or hasn't worked? Do they really understand? So we can get to the bone. We can find, should we scale this? What did we learn? Okay. And I'm very painful. I see I have some members of my team here, of my former team, on the chat, right? I'm very painful in having them do postmortems and write up on like, why did this not work?
And there's that beautiful book by Annie Duke, Thinking in Bets, and she talks a lot about postmortems as well. But we get lazy to analyze what didn't work, right? Because you don't see the return on investment of that the next day or the next week. It's not fun. How important is it to do these postmortems and to actually analyze what's happening rather than keep moving forward?
It's critical for me. Like you can't succeed if you don't learn. Like, there's just no way. If you are successful, but you haven't learned, then you've been lucky. That's it, right? You just been, and the question is, how often can you be lucky, right? Or how many times in a row can you be lucky, right? And life isn't about that, right? Life isn't about planning to be lucky. When you imagine you go into a job interview for a VP of growth marketing and say, what's your strategy? And you say, oh, I plan on being lucky. Well, obviously you're not hired, right? So what is your strategy? And so if you want to go back to say this experienced person and the process and the framework that I apply, we talked about the way of growth, which is experimenting and upfronting the cost. Okay, so what is the key to success? The key to success is in lowering the cost of each experiment.
Can you go through that in detail? Because I completely aligned with you on this one. Just upfronting the cost. Can you break it down a bit?
Let's bring it back. So it means that to reduce the cost of acquisition, you are going to build quasi products, okay, or something that gives more value to the future customer than just the core message, which is like, hey, this is a product, this is what we do, please sign up.
Okay, but I can imagine the marketeer there thinking, yeah, you're just talking about content marketing, for example, right?
So I'll give you a couple examples. At Gorgeous, we built a couple of web scrapers to look at Instagram. Okay, and so just for context, Gorgeous is a help desk for e-commerce merchants, right? So tickets, okay? And we were looking at e-commerce brands that had a presence on Instagram and whether they were making posts, and on those posts, whether there were negative comments from their customers that were going unanswered for a couple of days. And then we screenshot that automatically, inject it into the email, and we say, hey, if David is like the CEO or like the head of brand or whatever, we say, hey, David, we found this negative comment on Instagram, hat tip, you should get to it and answer it. It's just good practice. So what's happening here? One, it's true. It is a good recommendation. You should take care of negative comments on Instagram, right? Two, it's factual. You can check it. I'm not making up some random thing, right? And three, it's actually like valuable, timely information that I can automate. Okay, so that is kind of like, that's an example of me automating value creation. If you look at Drift is a live chat, all right? The promise of a live chat is to reduce the time to connect with between the sales and the prospect, right? We created scrapers and automation that would measure the response time of any given sales team by automating a demo request on a form and looking at the email follow-up, measuring the time between the demo request and the email follow-up, breaking that down into hours and days, and injecting that to an email and say, hey, David, your sales team responded in like 6 hours and 30 minutes. That's just not great, and it's 20% behind the average. And if you reduce that to like 2 hours, you will probably increase your conversion rate by 20%, which is true, factual, verifiable, right? And again, I'm not talking about my product in any of those cases, though it does happen that my product solves and helps with that problem.
If anybody wants, go ahead.
So when you think of those things are quasi-products. They require engineering, they require PMing and all of that, and they're shipped and they're maintained. But all of the cost is upfront. Okay? That's upfronting the cost. The way to succeed is to think in this way. When you're a growth person, you're like a VC. What it means is that you are doing a lot of experiments where you're trying to reduce the cost. Most will fail, and some will pay back the entire effort. Okay? So you're spraying and praying. And so the way to succeed is to reduce the cost of each experiment, MVP them, learn from the failures, scale the successes.
And so if anybody wants to dive a bit deeper in this, you can also Google, the term engineered marketing is used quite a bit. There's a book called Traction, and Justin Mayers has a whole chapter on it in there. So engineered marketing, and we'll probably share a few examples a bit later on. We're going to dive into the Q&A in a little bit. We were on careers. I would like to give a little tip on growth careers. Try to not focus your learning on expiring information. A lot of us are on the treadmill of consuming something called expiring information. It's like information that doesn't have a long half-life. Work on the fundamentals quite a bit. Information that we will care about next month. If you're getting into it, it's areas like behavioral psychology, for example, a little bit of automation, for example. If you're a little bit further in your career, please focus on your financial knowledge. If you want to know where to have impact. A lot of people in growth still don't understand the basics of finance. So they're not focusing on things that have a big impact, or they can't translate their impact in financial terms that are important for the organization. So that would be one life pro tip. Work a bit on your financial knowledge, your business casing, your understand what a balance sheet is, what a P&L, net present value, actuals versus cash-based forecasting, et cetera, et cetera. There's a big gap there. That's it.
I have one recommendation for people who are a bit more advanced. Start doing some mentoring or advisory, even for free, of other companies. The knowledge you'll learn of seeing how other teams run, their experiments, their successes, and their failures are applicable to your business. And you'll learn a lot more. There's no way you can run like 6 teams full time and learn from those 6 teams. Right? But you can definitely advise and get access to the internal data of 6 companies at just like 1 or 2 hours a month, right? And you can see, oh, this thing worked well there. This is how they're organized. This is the tool they used. So I'm in a special situation because I've got a lot of those, right? But I have like 10 different portfolio companies who are testing like multiple different tools for email, for personalization, and I can say, this is the future. I see this is working, right? And then I can apply this to all the others. So build your own pattern matching learning system in real time on what's new, not from the others. That's my recommendation.
Thanks, Guillaume. Let's dive into the Q&A. So let's do rapid fire. You get like 30 seconds to answer them, let's say. Maybe 45 if it's really
okay, let's go.
Let's see if that works. So I'm going to take the questions that are the most upvoted. What are metrics or indicators of finding those channels, strategies that show potential for depth?
Yes, I tend to max budgets on a very short period of time, right? Instead of saying, hey, like I have a $3,000 I'm going to spend on a month, and that's not going to tell you. I'm going to say, cool, like let's just max out at like $1,000 for a day, and let's see how much I can drive. That's for paid, right? Generally, if you just take a step back, I recommend everybody in B2B SaaS to build a good list of their total addressable market, all the companies that they have in the market that they can address, and see where can they find those. So build a list first. Always have a list first.
Does that apply for non-SaaS as well?
It applies to non-SaaS. It does not apply to B2C. B2C, the market is just too big for that.
Yeah. Best 2 books or big content that you read in 2020, 2021?
Yeah. So obviously I'm working on my investing. So here's one, Angel from Canis. That's one. And I'd say the other one that I really like is the Everything Store, learning from Amazon. Even if you don't like too much of that culture, there's a lot to learn in there.
Cool. Any idea of successful campaigns that do deliver value versus campaigns that don't?
Yes, absolutely. Try to make learn something about the future customer that is painful, is problematic, and your problem resolves. All right, that is, and make a prediction. My recommendation is that making a prediction, even if a bit wrong, will always work better than not talking about them. Okay?
Does that pain does the customer need to be aware of that pain?
They need to agree that is painful once they read it. They don't need to know beforehand. For example, the response time is not something that VPs of sales check, right? But if you tell a VP of sales that their sales responds in 3 days, if that's true, then they will agree that that's a problem.
Yeah, makes total sense. Here's one for me, actually. CLTV. Are we talking revenue or are we talking gross margins when calculating customer lifetime value?
So for me, it goes back to like the learning about finance that you said earlier. Short term, you're talking about revenue. Long term, you're talking about margins. So here's another way to look at it, right? Margins don't matter as long as they're above 70%.
And then you need to look into your contribution, because we see this a lot, right? We talk about this ratio of 3 to 1 CAC CLTV, but that makes a lot less sense when you're looking at revenue and when you're not looking at gross margins.
One way to think about it, a very simple way, your total CAC, so sales, headcount, discretionary spend, the total CAC should be about $1 for $1 of annual revenue. Okay, that's the average. Okay, it's a good average. Okay, and within that you have to pay your salespeople, your marketing people, the campaigns and whatnot. It's $1 for $1. Okay, that means a few things. It means that your retention needs to be more than 12 months, otherwise you're losing money. Okay, and it also means that I'd say within that you need to find, let's say, what is the paid CAC. All right, do not blend your CAC or I will kill you. Okay, do not blend your CAC. That is cheating. If you take your organic and SEO and blend that in the paid, that is cheating.
Yeah. If anybody wants to take this a bit further, there's pieces by David Skock that explain this really well, and look into the contribution to overheads model. Also, when looking at lifetime value, it's a financial tool. It's called the contributions to overhead model. You will become invincible if you can understand it and manage it. I actually learned it from our COO over here. It's very powerful. Can we go deeper into, you have 30 seconds and it's a 1 hour question. Growth team structure being under marketing versus being under product versus being independent.
Yes. It's a question about where are the incentives and what is the growth team's KPI. My position is on being independent, and it's a question of culture and incentives because product and marketing, traditional marketing, are incentivized for success at every launch. Okay, and so they upfront the cost of research and finding the most likely campaign or product to launch with a high success rate.
Yeah.
Growth is the exact opposite, all right, in a funny way, because we talked about upfronting the cost.
Right.
Growth actually ships a lot of things at a low cost and discovers what's going to learn, what's going to work by looking at the data. And so there's a high fail rate. You cannot have a team which is incentivized for high fail rate working with a team that is incentivized for high success rate in the same team. This is not possible. It's going to break.
I think this is so crucial. Can you go through this model one more time? Just break it down one more time.
Yeah, sure. So if again, you go back to like marketing teams, right? Just imagine a marketing leader that has 3 product launches and he fails at 2 of them and now is working on the 3rd. Do you have confidence on that person succeeding? No, that person's fired, right? I guarantee that person's fired, right? The thing in growth marketing is you're not here to do the obvious, okay? A lot of people say, oh, we're going to do all the obvious things. Like, cool, give that to the marketing team.
Yeah.
Right? Like, if it's obvious, if we know beforehand it's going to work, then it's an execution game. It's not an experimentation game.
No,
if it's
100%.
execution, they will be better at that. You're here as a growth person, as I said, to be like a VC. You don't know if it's going to work. It's very similar to angel investment. You have limited information, all right? And you're trying to like build something to find out does this has any ground? Is it solid? Okay, and you don't know.
High
if
risk,
you know, yeah, high risk, high returns.
But the returns are exponential. So the returns are
and they pay back outweigh the risks. And they pay back all the risks.
100x,
right?
100x, 300x.
But the culture is different. It means that as the founder or as the CMO, you need to explain that this team, they're not going after the next shiny thing. They're not just jumping around, okay? They are finding out the next big levers for growth. There's one caveat that is important.
Yeah.
The growth team cannot maintain all of what they ship. Otherwise, they slow down. So there needs to be a handover at one time of the successful experiments to another team.
What do you call that? Product marketeer or?
Depends on the scope. It can be product, it can be marketing. There needs to be a handover to a team that maintains, I say, those wins.
And I think what's really important there is, like when there's a sales and marketing department, you usually don't have marketing. It's just marketing doing the work for sales and being like an agency. It's kind of same thing in marketing. When growth is under marketing, you don't typically have a growth team, actually. You just have a fancy sort of marketing team, and you need to somehow incubate them for those high risk, high reward experimentations. And it's tricky and it takes time. No, that's a good one. Other question. So if a company's scaling and needs to have these growth capabilities within their organization, can they, when we see the skills gap from a macro point of view on the market, it's hard to hire good UXers, good growth marketeers, legitimate ones, performance marketers. Should they build those capabilities or should they hire those capabilities? Can they only hire for those capabilities? I'm not talking about companies like Segment or Growth Tribe or HyperGrowth that can easily hire. I'm talking about more traditional organizations. Do you build those capabilities or do you only hire and only try to buy those capabilities?
Yeah, it depends on your culture and like what is the and how much, I'd say, how risk-taking is the organization. If we think of more traditional organizations, the risk-taking is low. Like the more traditional the org, the less risk-taking there is, and the further away from startups, the less risk-taking there is. All right, and so that's one thing. And so the people they don't have that culture, and they don't have the connections and network to learn, and the mentorship and the communities to learn about what's going to work. It's very easy. People think I have a lot of ideas. No, I have a lot of friends. All right, that's the difference. I have a lot of communities where I see a lot of things, and I can just I can suck up all of those good ideas and apply them to all of my businesses.
But also identify which ones are valuable. Also.
Sure. Do you have that person in your organization? Yes or no? If you don't, you need to hire for that person.
Yeah.
You
So
can't train for that. That's my point is that you can't train for that mindset.
Yeah.
Okay, that is something that people have or they don't have.
I would argue that every company has a person like this. Maybe not early stage when we're talking 10, 20, but we work with really large organizations of 5,000, 10,000, 20,000 plus. All of those companies have those people. They're just not being used correctly. I'm going to do a shameless plug. We're actually writing a book about this. It's called Upgrading Brains. And you can sign up to get the early version. It'll be out in like October. I'll share the link later on. The fact that identifying those people within the organization, nurturing them, and helping them be the teachers for others, and how to upskill everybody else within the org, because hiring is freaking expensive, and we see so many of our portfolio companies they're not able to hire the right talent. They're just not. So we need to start building those capabilities.
Use mentors. Just pay mentors. There's a ton of people who are happy to like be paid for a couple of calls a month to like up level your team. I am surprised that so many organizations don't use that. Like pay somebody who's a couple of years ahead in their career. All right. It give works. Them just a bit of stock. All right. I've done that for years. Just take like 0 point something of a company, of a young startup, to like coach and mentor their employees.
Absolutely. I think it works really well in the startup scale up. It becomes to be difficult within more traditional orgs where still 80% of B2B marketeers work, let's say. Okay, we're running out of time. Let's do the last, I don't know. Do you have an extra 5 minutes, 10 minutes to go over?
No. I'm blocked.
So I'll ask you one last question.
Okay.
Can you talk about the concept of a Rockstar generalist versus T-shaped?
Yes.
It seems to be that if you had generalist experience and the product succeeds, you'd be in a position to go deep on one area.
Let's put it the other way. I think that being a Rockstar generalist is one of the hardest but most valuable things for your organizations. I'm not saying that you are the best at every vertical. I'm not best than Maxime, who runs, paid at Gorgeous. But I'm good enough to understand a lot of things about paid, how it works, and to be able to call bullshit when I see it, right? But more importantly, I have good enough knowledge on all the verticals so that I can know how to stack the things together. I know how to connect paid to emails, to the websites, to the user onboarding. Very few people know how to do that. And this is important. It's important because if you can do that, you can then understand the experience of the life cycle of a given user throughout all the stages. Few organizations do that, and there's a breakdown in experience at every step. You have a very good personalized onboarding campaign, or say paid campaign, and then the nurturing is a completely different topic, and the onboarding is completely different, and the user is lost. Okay, you got to be able to think through how can I have a very horizontal experience for each audience that makes sense, that is relevant. You can only do that if you're good generalists, and that is where you find the best experiments.
So be curious, expand your cognitive bandwidth. You will have more growth options in your brain, and do that by watching YouTube videos, listening to podcasts, running experiments.
One last recommendation.
Yeah.
Side projects. I most often, when I hire and I recruit people, I look for side projects. Side projects are a good sign of people who are trying to expand their cognitive access to things that they have not been able to do in their own organization. Okay, somebody who does paid, but is trying SEO on the side project. Somebody who's on email, but is building other kind of products. Like side projects for marketers are a fantastic sign that that person is really curious and has strong appetite for learning.
Awesome. Guillaume, thank you so much. Do you have anything that you want to promote? I don't know, HyperGrowth?
Yep, I'm launching HyperGrowth.vc with my partner Gonto. So if you're, let's say, later stage startup company, above 5 million revenue, and you're thinking you're at the inflection point of future growth, you can go from 5 to 50 in 2 years. Drop us an email, g@hypergrowth.vc.
Okay, and everybody follow Guillaume on LinkedIn. What are you using at the moment? More
LinkedIn.
Follow Guillaume on LinkedIn. He's still sharing nuggets. Really amazing. Thanks so much. It's been really fantastic. For all of the questions that we haven't been able to answer, we'll figure something out. And then I'm wishing everybody a fantastic day, evening, morning, whatever it is. and see you soon.
Thanks, David. Thanks, everyone.